Hello Market Club members everywhere. It's game on for Friday the 18th of December. Well, this has been one heck of a week. I mean, no question about it. But I want to show you what I see in the marketplace and what the Japanese candlestick charts are telling us as well, which are very powerful charting techniques or formations that set up that actually can indicate reversals. And one of the strongest is a bearish engulfing line. I'm going to show you that right now. So we go to, this is the Dow. You can see the Dow 30, but this could be any of the major indices. They all have the same pattern. So here's the action yesterday. This is Thursday. So there's the open and there's the close. In the previous day, you can see it was just in between those things. So this Thursday engulfed the previous body of the previous candle. That's called a bearish engulfing line. It can happen on the upside and the downside. In fact, there's an example of it happening on the upside. You can see this is coming down, engulfed, boom, the market went up. So this is where we're seeing a reversal in terms, but it must be the market closes lower the next day to confirm this position. So it has to close lower today, and by all accounts where we are right now, it looks as though it's going to close lower, indicating further weakness. We've been concerned about the Dow all year and the major indices. We felt we've got no movement, and we've seen this big sort of rotation out of stocks, it seems to me, but we'll talk about that a little later on. But look at the RSI. We're below the 50 line right here, indicating further weakness, and our trade triangles, intermediate trend down, short-term trend down. Only the long-term trend is still positive, and that can change also, but that's going to take a while to do. But again, this is not a good sign for this particular index. It's the same pattern on the S&P 500 right here. You can see an engulfing line right here, lower close, below the 50 line. The pattern is the same. Weekly and daily trends are down. It's going to be hard pressed for this market to go higher for the day, in my opinion. But again, this is where we closed last week at 2012. We are a little bit higher for the week. However, that can change. We're not finished trading at around 11 o'clock today when I'm doing this video, so let's see how things show up. Same thing on the NASDAQ. You can see this is the NASDAQ Composite Index. Engulfing line, very distinctive here. Closed lower, not a good sign. We closed last week on the NASDAQ at 4,934, so we're only about 40 points away from closing unchanged for the week, and it's been, as I said, a heck of a week. This is the ETF, the gold miners ETF, market vectors. You can see that GDX is the symbol. We've talked about this, and that looks, I'm going to scope this out just a little bit further, and that looks to me like it's trying to make a base. It hasn't made a major turn yet, but you can see this sort of base building that's going on, and certainly a move over 15 would be a strong indication that we probably put in a base for the time being. But the other thing to note here is the fact that the RSI is still below 50, so we're not over 50. Gets over 50, get a lot more momentum, but again, it looks like as though it's putting in a base. So watch that very carefully, because that could be the rotation in 2016, people go into gold and gold shares as opposed to other stocks. This is GLD, probably the most popular ETF. And what's interesting there, this tracks gold very, very closely. So let me scope this out just a little bit further. And what's interesting there is what I consider to be a bullish divergence. And what I mean by that is that you have prices. Here's the low price here, the market rallies, okay? But we make a lower price here. And look at the RSI. Here's the low, and here's the low right here. So even though the prices have been going lower, the RSI has actually been trending in the reverse direction. Watch the 50 line here. Again, watch the weekly and the daily. If those turn green, you want to be long this particular share. If you want to be very conservative, wait until the monthly kicks in. But we trade gold, and this is, remember, this is a mirror spot gold on the weeklies and dailies. This is the euro. We've had a nice run up. There's a strong day. It's coming back down. Sort of flat for the week. Nothing, actually a little bit lower for the week, but nothing really dramatic that's going on here. We should find support right around these levels, but give it some more time. But again, the weekly is up, the daily is down, which means you should be out of this market on the sidelines at the moment. Crude oil, all our trade triangles are down. We're looking for a 30 print, a 28 to 30 print on crude oil, and you can see it's just incredibly oversold. Not much change there. This is Apple. This has been one of our big contenders. All of our trade triangles are now negative on Apple, which is not a good sign. It's the first time we've seen that happen in a long time. So we'll have to see how that plays out. This is where it came in today at 107.31. First time I've seen red trade triangles on Apple in a long time. So just be aware. This is Facebook. Facebook's actually doing better. It's 65. It's a trading range. You can see right here the weekly's down, the monthly's up. So it's a trading range. You should be out of this market if you're a short-term investor waiting for the weekly trade triangle to turn green. Under Armour does not look good. That's all red trade triangles pointing down. This is just before the holidays. They should be knocking it out of the park. Something is not quite right here. This is Walt Disney. We talked about Walt Disney. Remember we had the pop-up in Walt Disney. We said the major trend is still down. Well, it just resumed today in a dramatic fashion. And you can see we're down over 3% in Disney today. So again, the trade triangles eventually get it right, and that's the key thing to remember. This is Amazon. Amazon, mixed picture there. You've got the weekly down and the monthly up. Longer term trend positive, shorter term intermediate trend mixed. You should be on the sidelines in this stock. Even though I love Amazon, I just ordered things from it today, I still go with the trade triangles on Amazon. This is Netflix. Same picture with Netflix, no pun intended. Weekly's down, monthly's up. Mixed picture. You should be on the sidelines. We're back down to the 50 line, which is support, should be support for this market, but I'd be very careful. I'd rather be on the sidelines balance of the year, probably because the markets are so volatile. I mean, no one's made money in December pretty much unless you're day trading, and we showed you that yesterday. But again, these are volatile markets. You have all year in 2016 to make money. You don't have to make it in the final 10 days of trading or something like that. So be careful. I'm Adam Houston. It's game on for December 18th, Friday. Have a great weekend, everybody. I'll be back on Monday.